The current lack of a Brexit agreement also calls into question the trading of UK stocks for EU citizens. Now there is a temporary solution. However, this applies to fewer than 50 shares. One of the big unsolved questions of Brexit is how the EU wants to deal with access to the London financial centre. After the transition period expires at the end of the year, the UK will become a third country, which it technically already is because they are not member of the EU anymore, just of the single market and the customs union, and they have to apply EU rules still, but they are out of the EU, not in the parliament, and so on. The market access of British financial service providers to the EU then depends on whether the EU classifies British financial market regulation as equivalent. In technical jargon, it's said equivalent to its own. Only when this equivalence decision has been made can investors also buy and sell shares in London, among other things, at least in companies that are listed on both the island and the mainland. These include the pharmaceutical group AstraZeneca, the media group Relx, the travel company TUI, and the parent company of Iberia and British Airways. The equivalence decision is a long time coming. The European Commission emphasizes that there is no connection between the difficult negotiations on the post-Brexit relationship between both sides and the decision on stock exchange equivalence. The reason for the delay is that there is still a lack of clarity about future British financial market regulation. However, in the dispute with Switzerland over a new framework agreement with the EU, the Commission used the equivalence decision as a means of pressure. This is one of the reasons why there has been growing concern in the member states for some time that the end of the year will be the point too, and all of this will be in ruins. Therefore, the relief is likely to be great that the EU Securities Supervisory Authority ESMA in Paris has now issued a transitional regulation for at least some of the double-listed companies. ESMA said it was about minimizing market disruptions after the United Kingdom's final withdrawal from the internal market. The authority therefore allows European investors to trade double-listed shares with the European ISIN in London next year, but with one important restriction. This only applies to securities traded in pounds. We can therefore only speak of a minimal solution. According to ESMA, it is less than 50 shares. The trading volume of these papers is below 1% of EU equality trading. They were not systematically traded by European investors, but rather irregularly on British stock exchanges, the supervisory authority announced. The exemption can only come into force if the British financial regulator FCA agrees, but this is a matter of form. There is still no solution for stocks traded twice in euros. This applies not least to Irish companies such as the airline Ryanair, the insulation technology manufacturer Kingspan, or the Bank of Ireland. Last year, ESMA put the number of these papers at more than 6,200. Financial service providers and investors should not have much hope that ESMA will issue a transitional regulation for these shares as well. You have already done the maximum possible, stressed the authority. And if you now want to know more about European or global politics, YouTube has chosen another of my videos right here for you on the end screen, right next to your chance to subscribe to my channel. I'll see you in my next video. Click and enjoy. Viel Spaß!